I'm recording now. So if this is the only, if we do, this is what we will do in the next DC, in the next now and the next DC, because everything lies on storyline. I want us to really take this place so serious. You understand? The beginning is not even that one is simple to understand. Storyline is the foundation, just like a foundation, a house that is built upon foundation. If the foundation is faulty, it will affect the entire building. Storyline is the foundation of your trade. So the quality of your storyline determines, the quality of result or the trade you get. So we are going to spend the next we are going to spend many times to make sure that you really understand this storyline. How do you build your storyline? How do you analyze the market from level to level? And what are the points you must look at when you are looking at the levels? What are the points? I'll show you 3 major points that are very, very feasible to your levels. 1, I made mention of week. You must see week if you are going to sell. If there's no week, no trade. 2nd, I made mention of liquidity sweep in your level. When you're analyzing your level, you must see liquidity sweep before you say you want to go and rush and enter trade. Your setup must have this validation. If your setup does not have all these validation tools, it's likely going to be a very bad setup for your trade. And lastly, we'll talk about the congestion area. I've uploaded the video which I did on general people that this the mentorship class. I posted the video on that. So when we close this in, I will enter into the manual. I'm going to do a special manual on it. They attach it to the video that will explain the chart and everything in words pointing to social area, blah blah. So now I've told you that this area, every market participant is concentrating on this area because this is where the huge traffic is coming from, this congestion area. Because price has been, if you look at it from the past, you see that price has been reacting at the same level. So in the future, in fact, you really want to even print it out and paste it on your by your side of your district, that in the future, when price come to this place, it breaks it out, you know that you're going to be a big buy for you. If it does not price does not close above it, that means it's going to do what? It's going to come down straight. Like what happened here, as long as price does not close above this zone, this congestion zone, you see price does not close. Price continues to tap into it. It's a strong barrier. It's a strong area because of what? All the levels are aligning at the same place. They are aligning at the same place. Just like I told you of that vehicle stuff. They are held up in the same place. In the same place. So if one of them succeed in opening the traffic, you can imagine the rush. Like this place now, like we have in this place now, we have here in this place here. If we mark this place, this internet to cut. If you get this place out right now, you know that once you come to this place, this is a congestion area. Because of what? Because 1, you can see the levels. The levels. So many levels. 1, 2, 3, 4, 5, 6, 7, 8. Price break through it. It came down. It reacted to it back again. It broke through with a body, not with a wick. There was a close above. It went upward. Why it came down here? Because of all this. This is a traffic. See it? This is a traffic. You see the level. This is a traffic area. 1 here, Eh? Another one here at the same place. Can you see it at the same place? You see one there. If you look, go to the back, you see so many SNR that are congesting at the same place. It's a big EDC. The Malaysians do not point all these guys. They did not point it. They didn't finish it out. Point all this thing out. It's because of our long-standing experience about support and resistance. If you have a deep knowledge in support and resistance, you understand the thing I'm talking about. Some people only depend on this alone to look at this. They will mark it down. In the future, when price comes to it, they want to take a trade. That's what those positional traders do. That's what they do. They will not bother to be looking. They will just look at those that area that price has been always been reacting in the past that caused that's making a congestion area. They want to trade along that path. The same thing happened here. If you watch this volatility indices market here, if you come here and this is V75. This is V75. You can see that price has been congesting within a range, a particular range. If you can identify that range, once price tap into it and it does not close above it, and you see other engulfing that close below it, that is a good step for you. If price tap into this place and you see a break out of it, what is a breakout? You want to see a breakout like this. Want to see a breakout like this? A break. So this is. Oh, I've removed it. Shit. So it's not the market. It's not the market. This congestion is not the market. So if you go to weekly, if you go to like daily, you see the same area. See the congestion. Price has been ranging within a tight zone. So you locate that tight zone so that in the future, when market comes to it, it will react. That's the area you are going to take action. Like this place now, as it comes to this place, in the same place here, it's coming down. There's a possibility that this price will come down to this place again. If it got to this place, there's a probability that this price will start moving higher. So that's the congestion area for this market. If you go to another market, it's like that. If you can locate those areas that price has been ranging within a particular distance, that's a congestion area. That's a congestion area. Like for example, this place now, this is the this then started. So it has its own congestion area that you must identify. The same thing happens to into gold. Into gold that I just showed you. The same thing happens into gold. If you go to weekly, you will see the congestion in weekly. You see, gold has a range like that. Just map out that range, and you will be using that range to set up your DC. This is a range now. This is a range. If you go to the past, you see that the same thing price reacted along that path. The same place. The same place. So that's the congestion area. That is why you see here, price reacted here strongly because of what? This is a congestion area. This is you see the resistance. It formed a resistance. It formed another resistance. It broke through it. It reacted back to it. It could not break below. It went higher. It broke through it. It reacted back to it. It broke through it. It reacted back to it. So you must identify that place that price likely go to cause a congestion. So you want to put your trade around that area. It will help you. It will help your trade a lot. It will help your trade a lot. Somebody just trying to push. So if you can just use this opportunity to just deal with this issue of storyline very, I really want you to understand how to fine-tune your storyline very well. How to fine-tune it, because it is the bedrock of a trading plan. We will not go forward if we do not trash out this place in a most simplified form. That you want to see your storyline in a healthy form. In a healthy form. Not just do it anyhow. Just no, it will affect you everything. The entire trade falls on the storyline. So you must make it look so healthy. You must look in and out of it. What will affect this place? Why this place reacting this place? It will affect it. This place reacted to it in the past. The same way it's reacting to the same line. You want to take that place serious. That place, the price will continue to react to it many times, because there's a basic assumption in the market that a pattern always repeats itself. That's the basic assumption of technical analysis. That price, when price react to a particular level in the past, there's a possibility that now it will react to it. If you react to it now, that means in the future, it will react to it again. It's sentiment that drives the market. Emotion, human being that drives the market. The sentiment area. So you must identify those areas where there is a key level of resistance and key level of support. Key level of resistance and key level of support. All this area, they are key level. You see price react to it, it broke through, it react to it, it broke through, it react to it, it bounces. It's key level. The same level is still react at the same level of this place. Price was react and continue to react to that place. So right now we are in weekly. That means price has come into this congestion zone here. It's reacting to another one here, which we found out in that daily time frame. So probably if it broke through it, it's coming down. If it did not break through it, you go back to this place, to that upper boundary, it will go and break through. If it doesn't break through it, that means it's coming down again. So it will be moving within that range. So your aim is to do what? Is to target pips that is contained within this range and this range. If you come down, you see a bounce off it in a lower time frame, you quickly buy. Your target will be up here. If you see another thing, you buy. But if you break through it with a close, you have a breakout below it. That means you are targeting the next distance. So you'll be able to position your trade plan along that path. It will help you to fire up your position, so that when you enter, you will have a very good probability rate. Yeah, very good probability. Like this place now. This place, the same level here. You price touch it, it return back to it. The same level. He had it to touch it, but he broke through it. He returned back to the same level. And if you see in the past, price has always been doing, this within the same level here. Right? You see the same level. So you position yourself, I know that because this is an SNR at the same level. That's why you see the bounce, big bounce. Because of what? Because of the congestion that happened here. 1, 2, the same place. This one too. See, the same place. See, in the past, you have this. The same place. In the past, you have another one like this. You just map them out. You continue to write. You can even print some of the others where they print it out, paste it in their by their desk or whatever. They are looking at it. They are watching over it. Anytime price comes into that place, they take another position. So when price comes to it, they take another position. That's why you see price tap into it. As long as this price does not close below the zone, and you see a bounce, and price tap back into it. With this tap, see rejection, off it. See the rejection, off it. Up this level. This is a breakout, right? This is a breakout. You tap into it, then it bounces higher. You can imagine how many pips there from this place to the next congestion area. That's 1,338 pips. Just in 3 weeks. In 3 weeks, it got to almost about 1,880 in 3 weeks. And because this is another congestion area, it came back, it got to this congestion, it tapped upward. You use another opportunity to buy into this. When you see this rejection of this zone, this congestion zone, price move higher to almost about another 1,232 pips. So if this is only thing you just use to focus your DC on, you see a breakout at each congestion area, a breakout or a tap into it with rejection, just like that, because you are working on a higher time frame. Some people just only once in a month, some just one in 3 months, trading on level of support and resistance. That's all. No indicator, no, they don't use indicator, they don't know, just pure price action, naked charts, resistance support. When price move into it, it reacts. They follow the reaction. So that is another validation. This thing I want you to understand. I want you to apply to your storyline when you are doing your storyline. You must make sure that that level has what it has more than one distance that will make it more a congestion area. I'm not saying it's not compulsory. If you get it like this, gap to gap like this, it will help you a lot. You know that, okay, you are targeting from this place to this place. Even if price is still doing some funny thing, you know that confidently it will go up because this is a congestion area. If price break out of this place, you know that the next level will be what is the next congestion area it is going to, because it reacted back into it. It's to go into it back again. If it breaks it out, it will retest it. If you retest it with a rejection, you buy into it straight. If it does not reject, if it does not close above it, it will withdraw back with it like we did here. You are selling. Your target will be here because it's coming to react to this. It break out of this place. The next target is what? Is this place. See, all these are congestion areas. Congestion, the same level of support, the same level of support, the same level of support. They are congestion areas. So the PIP that is contained from this first level of congestion onto this place is huge. 523 pips just in 1 week alone. In 1 week alone. It's enough for more than somebody that is just struggling every day, try to catch up with one. So that's a good point to note in your analysis. That's a good point to note in your setup. So that's why I really spend more time on this. And it's not really general like that. It's exclusive to the VIPs. Because the Malaysian people did not really pinpoint on this area. They only use means, they use a touch with a week, that's all. But we were using, because of our knowledge of ICT, to help fine-tune the level of support and resistance. It's not like people are creating confusion. We look at it and say, it's creating confusion. Whether you like it or not, you need deep analysis of what is price action. You need deep analysis. Yeah. You don't use only 1 point. If you use only 1 point, because price is dynamic, it can go to the future and change direction again. But if you have this thing in mind, you have this depth knowledge about the support and resistance and what is happening there, and you know this thing is likely going to go higher. You will know. You have an edge over who does not get that knowledge. Price can be funny. It could be funny, very, very funny. So many times you will think it will do. It may not do the same thing it did in the past. It will change another level. It's people that are doing it. When they see that the market has been winning, people have been winning with the same structure, they change their algorithm. They have the money, they have the network, they change the algorithm. But you that understand the algorithm, they change to you follow it. For people that does not understand the DC, they will they get wiped out. So that is the DC. So what is a congestion area you must notice? You see that price tap into it, so very several times, price tap into it. If it breaks through it, it will retest it, it will continue in that direction. So that is one point. Then one thing I told you about is liquidity sweep, which are really pinpointing in that manner. Liquidity sweep. You must look out for liquidity sweep at your level of SNR, liquidity sweep. If this is a bearish candle, we want to see it taking out a particular high before it will start coming down. Yeah, like this. So this now forms what we call a liquidity sweep. This is a liquidity sweep. It takes out that high. If you are selling, this is what you must see. You want to see this. You want to see this. If you are buying, the opposite will be the case. If you are buying, this is bearish candle, right? If this thing comes down here into this place, if you get something like this, you get something like this. Now you have a week tap into this level of resistance, or sorry, level of support. And you now have a candlestick that opens higher, in a bullish candlestick that opens higher, not filled. It opens higher, and it wipes out the low of that candle. It takes out the low of this candle. Not the same. Takes out the low of this candle. That's liquidity sweep. It helps your this to, because what this refers is this. Once you take out this liquidity, it's going upward to distribute profits. This is manipulation. They have manipulated the low of this particular candle. They are going up to distribute profits. You distribute with them. They have manipulated the high of this candle. It's going to distribute price downward. Exactly what happens here. Can you see it? Exactly what happens here. Exactly what happens here. Let me remove all these things first. Let me remove them first. But note that that is a congestion area, right? Once you note that and you see that liquidity sweep in that place, nothing will make it to fail. Very hard. See it? See liquidity sweep? And what happened is, at that level of ADC, see liquidity sweep, it came down. That's what you'll be waiting for to see before you enter yourself and go to lower time frame to enter yourself. Liquidity sweep. Liquidity sweep. Once you see that, you see a close, at the close of this place, you strike immediately. At the close of this place, you strike because it has taken out a liquidity. At the close of this place, you strike. It has taken out liquidity. See this one. Price tap into it because this one has a liquidity sweep. This place, there's a liquidity sweep here. And price tap into what? This level of SNR. This is a big open secret. This thing I'm telling you. It's a big open secret. So just exactly what happens here is what is here. As you see a close below, I take out this low of this, it start going up. You buy immediately. You buy into it. you buy into it. You don't waste time. Once you sweep out liquidity, the next candlestick will move higher. So your stop loss will be below it. Then, but make sure it is on a higher time frame, please. Though it happens on lower time frame, but higher time frame has more advantage than lower time frame. Make sure it is on higher time frame, as from 4 hours and above. Make sure you get this on a higher time frame. If you go back, you see there, you see price, the next price will come down. The next price must come down. See it, price tap into it, it came down. Liquidity sweep. This is liquidity sweep. Oh, there's no, this is liquidity sweep. Price tap into it, you sweep up the low of this place. This is your stop loss. If this is your stop loss, price does not come down. You can imagine how many pips that is there from here to this place. In 3 days, you've circled out almost about 878 pips in 3 candles. Because of what? Because of what happens in this place. There is a liquidity sweep here. There's a liquidity sweep here. That candle sweep out the liquidity. You sweep out this one. At the level of this SNR, this is SNR. You tap into it, sweep out this liquidity. This is liquidity sweep. This liquidity sweep. And price tap back into it. It came down. Liquidity sweep. Liquidity sweep. At the level of SNR, you have a liquidity sweep. The price tap into it. This is a liquidity sweep. This is a sweep. You sweep this low. You sweep this low. So as you get this in here, from here down upward, we'll be buying. The price does not tap into this level, but there's a liquidity sweep here. It tap into it here. So this one will give us a liquidity sweep of it. So you just have to be smart. Yeah. So we have a liquidity sweep here. So we don't have a tap into it. It's a fresh this, but it's a liquidity sweep. You can see what comes down. You can see what comes down. This is a liquidity sweep. See what happens. We move higher. Because it's a daily. We are using daily. That's why it's so smooth like that. You see it, we tap into this area. What happens? See it, we tap into it. This is a level of support. You whip out this place, liquidity sweep. So as you get a close above it, it moves higher. Liquidity sweep, liquidity sweep, liquidity sweep. This is a tap into SNR. Then does this have liquidity sweep? It has. Is it? Very, very highly predictive. And you can imagine just only 1 day alone. Just only one after that place. Just only 1 day alone. You can imagine what this thing gives. 519 pips. Just only 1 day. Because of what happens in this place. It tap into this support. It has gotten, this is what we call it a liquidity inducement in ICT. In ICT. So it is the ICT knowledge. Thank God for this guy, alchemist. It is ICT knowledge that helped me to observe this thing very well. That something reoccurring now and then. If we have a sweep that happens at the level of touch of this thing, price must respect it. Price, this is liquidity sweep, and this is level of support. Price must respect it. So just use those 3 points. Use those 3 points to validate. We are using those 3 points to validate our listening. So we quickly go into. I want you to. What I will do is I will still give you some medicine to do the assignment on this thing. So I really want to see your understanding of this SNR level validation, then storyline. So I will give you a chart to analyze what happens between this level and this level, and why price reacts at this level, then what is the net direction? I may give you a kind of you think, I don't know this place, like, what is the next, where could be a possible direction? Yeah, I can just cut up a particular place, and I want you to pinpoint. I may not even give the names of this so that you not go and look at it and see it as an expo. You know, see it as an expo. I will just take the chart from anywhere. So I will not tell you, analyze it. Because when I was applying for my CMT, chartered market technician in UK, so they gave us a chart. They will just give us chart. No, whether good or evil, they will not write anything on it. They will tell you to analyze the possible next direction. It's part of our exams. Then we went to write it at British Council, but it's a professional. But the technical analysis is a professional course. It's a professional course. If you are a CMT holder in technical analysis, in the whole Nigeria now, nobody has become a CMT holder. Nobody. We don't have a single CMT holder in whole Nigeria. We only have only one person that knew them. It's in Egypt. Only one, the whole Africa continent is in Egypt. Ashraf Mohammed or thereabouts is the Egyptian Society for Technical Analysis. It's only in Egypt. If you have somebody that has it now in Nigeria, maybe staying abroad. Because Nigeria does not have the body yet. Body of it's just like an icon or this thing. It's highly placed above icon. Because in the whole world you have just 66,000 CMT holders, but now it's increasing now lately now. Because a lot of people are coming more into trading. They are doing more into trading. If you go to, I will give you their website. If you give their website to go and view it, they have level 1, level 2, level 3, just like a CFA. It's the same thing with CFA. If you have a CFA level 1, they will waive a level 1 CMT for you, a CMT exam for you. Yeah. So if you have CFA, you have CMT. The World Bank will be looking for you to consult your knowledge. There's a particular guy that UBA brought 2012 from UK. Young sharp CMT holder. I'm 3 hours consultation. The guy collected 10 million naira. 3 hours. He just came, consult their trading desk. Those banks, they are fully into trading. They have experts, they have consultants, they have the guy. They just call him and 3 hours unicorn. It's FXTM that brought him, one broker in Nigeria here, FXTM that brought the guy. So UBA now consulted him for 3 hours. The guy sharp 10 a.m. with that time. Maybe he will just go there and tell them, okay, we'll do this, set up this, we do this, give them maybe asset allocation, this what to allocate this for gold, allocate this for Euro USD, take this position, use so lot size. You just look at what they are doing and help them to set up their trading desk. That's all. We just consult for them and 3 hours.
That is, they paid in $10,000.
They $10 million, $10 million naira. Then.
Okay.
But the broker that brought in FXTM, it was when we went for the seminar. Then we were just still, 2012. We're still in the middle of my this in there, and we're still going to all those broker seminar workshop. It was there at the level of seminar. He was telling us all these things. Young sharp American guy. The guy is not up to 30 years. He has got his CMT. So it's a professional thing. So it's a professional career, but that is still very, very new in Africa. Still very, very new. Very new. I was so surprised when I heard I got to that website, no Nigerian this, no, not even in Africa. The only one this we have in Africa is in Egypt, the oldest body of technical analysis in Egypt. Then South Africa just set up their own. I mean, maybe 2 years back or thereabouts, set up their body. But as I'm talking right now, there is no CMT holder like ICANN, all those ICANN, all those. I can't plenty on the street because a lot of people wearing ICANN on the street. On the street, you will see small boy, maybe 20 years old, ICANN, a chartered accountant. But CMT, no, CMT, CFA, those are degree that you hardly see it common in everywhere. CFA, CMT, chartered financial analysts, then chartered market technicians. You are consulting for World Bank investment houses. They will be rushing after you. We will get there by God's grace.
Yes, sir.
We'll get there. So I will give you. We'll round up here so that you have a break. You refresh your knowledge. I will upload this to you. So when next we will come, I want us to still repeat this area of this. So because this is where the foundation of all trading lies. If you know how to analyze your market, you've won 80% of your trading. Because it is from the analysis that you set up your entry. If you don't know the direction of the market, you cannot trade. You must understand the direction of the market, where the market is heading to. In the next 1 week, you must know it. In the next 1 month, you must know it. In between now and tomorrow, you must know it. So that you use that to view your trade in mind. You have to view your trade in mind. So by God's grace, we'll cover up storyline now, and middle of next week we'll cover up by Friday. Should be able to cover it up so that we can go to trade plan proper. How to enter your trade, what to do, what to see breakout, how many type of entry pattern you must use. If you want to use entry pattern, the risk entry, we have confirmation entry. What is risk entry? Yeah, risk entry is what when you enter without a breakout, you enter at the close immediately. Or confirmation entry is you want to see a breakout in a lower time frame that confirms your trade. So each of them has advantages and disadvantages. Yeah. So we see before we go to, when we do that, we leave that, we go into trend line. Trend line, how do you draw your trend line? Then how to use trend line to set up your trade. Just using trend line alone. Trend line with a support and resistance, that's all. So we finally come into chart refinements, then maybe trade management or psychology. How to build your trading plan. By God, we should be able to finish by next week, so that you cannot do your back test at least 1 week. I want to see you see your back test, you show up your trade plan, show up your decision. Okay, why do you want to enter this trade? Why do you want to enter this place? Why do you want to enter this? Why do you enter here? Why do you enter here? What informs your decision?